Well, earlier this week, I sat down with the IMF's African Department Director, Abebe Selassie, who you just saw there. And I asked him what the IMF means by this two-track system in sub-Saharan Africa's economic recovery.
So, basically overall for the sub-Saharan Africa as a whole, we're seeing the recovery that started last year continuing this year, and we think it will be sustained into next year and beyond somewhat. So growth was of the order of 3% last year. It's going to accelerate to 3.5% this year, we're projecting. It will be closer to 4% next year and the years beyond. But this average number for the region as a whole masks two distinct paths that we're seeing in the region. In one camp are the countries with more diversified export structures, the likes of Benin, Tanzania, Ethiopia, Kenya, Senegal. These countries are growing, really it's a bigger group, numbers around 21, 22 countries. These countries are growing at 5% or more. So in many respects, they continue to sustain fairly high rates of growth that they've done for the last 10, 15 years in many instances. But there's another group of countries that are more reliant on commodity exports, oil, metals exports. These countries have been affected significantly by the decline in commodity prices that we observed a couple of years back. And they're still working through adjusting to lower commodity prices. In this other group of countries, we're seeing a lower growth trajectory. And this second group comprises some of our largest economies, the likes of South Africa, Nigeria, Angola, and those countries are all growing well below 3% or so, and holding down the regional average. So the point we make really is that when you unpack the aggregate number, you see quite a heterogeneous, quite a diverse story, as always with sub-Saharan Africa, and I think that's something which we're bringing out, all of the nuances about the region's economic health.
Now it's interesting because when you look at the growth track of this dual growth track, some countries clearly have a lot further to go to catch up with Nigeria and South Africa. So is it expected then for Nigeria and South Africa to be growing at a slower pace considering their starting point versus some of the smaller economies?
So, let's start with Nigeria. Nigeria really has been hit quite significantly by the decline in commodity prices, and of course, oil prices remain much lower than they were, in the years before 2014. The last couple of years, there's been a lot of emphasis in adjusting to this lower commodity price environment. And post now that the elections are behind, we really are looking forward to the kind of reforms Nigeria needs to create a lot of certainty for private sector to invest, and the economic diversification that Nigeria so sorely needs to be facilitated going forward, and for the country to be able to grow at the 6-7% it used to grow in the 2000, between 2000 and 2010 or so, except this time, not just from oil or oil prices, but more from a diversified export base. So I think that's the policy requirement, the reform requirement there. In the case of South Africa, I think the political transition has been quite lengthy, and there's been some policy uncertainty, again, which has hampered private sector investment. We think that there is a need for significant product market reforms. The calibration of macroeconomic policies we feel is broadly appropriate, but really it's more in the structural domain, looking to make product markets very competitive, so the cost of telecommunication, for example, can come down, that you have more inclusive banking services. Facilitating more competition there, we feel, is one of the reform requirements that will allow South Africa to grow rapidly than it is right now.
Something that some people consider could be a game changer, the African Continental Free Trade Area. Do you consider that a game changer, and what needs to be done to really make the implementation, make the outcomes a reality?
Okay. Look, I think I'm very excited. I think really initiatives like this remind me of, the genesis of entities like the Africa Union, OAU as it was when it was created in the 1960s, or the dreams we had in establishing things like entities like the African Development Bank. So I think it's a very, very important initiative. The work we've done shows that, once implemented, it should help boost intra-Africa trade significantly. All the more so if we address, not just the tariff barriers, which this which this agreement is focused on, but also if we lower non-tariff barriers, which can also hinder trade, even in the absence of tariffs. The reason why we're excited about it, why we think it will be really an important vehicle for helping countries diversify, is that when you look at the composition of African exports to each other, it tends to be more of manufactured goods, more processed goods. Whereas the bulk of our exports to outside Africa tends to be commodities and other natural resources.
Right.
So one of the avenues in which we think the Africa-wide continental trade area will facilitate economic growth, diversification, is exactly by creating deeper, wider markets for countries to exploit.